What's up, folks? I reckon you can hear me now. So yep, today I am just going to do a little bit of coding. So I figured I'd start the stream. I can come on and kind of see what I'm doing with coding, and maybe you'll pick something up about the TradeStation platform or about coding, and maybe I'll have a breakthrough one day, and then I'll come up with the best code possible, and then I'll be done coding forever. Not likely to happen. Not likely to happen. But never say never. Right? Right. Okay. Alright, so actually yesterday I put together a little bit of a code. Man, glasses, boy. Glasses are modern technology, the modern marvel. Let's see. So I did put together a little bit of a script yesterday, and I put it together on my other computer. So let me pull up my other computer, and then I'm going to just copy the script onto this platform, and we'll see how I did. I actually put one together for the 5-minute time frame. And so what I'm thinking about doing is, I think I was doing something similar to this before. So looking at the 5-minute time frame, finding a good script that works for the 5-minute time frame, and then when that gets triggered, then I move down to the 1-minute time frame on the script that works for the 1-minute time frame. Then jump down to the 15-second time frame, and then I've got like multiple time frames that are executing, and or just have that one script which all combined, and that it only will trigger on the 15-second time frame. But it's good to see just generally what's going on the 5-minute time frame, 1-minute time frame, and 15-second time frame. Even though you may only be looking at the 15-second time frame, it's good to see what's happening on all the time frames, and then you can make an educated decision if you don't want to just execute an algorithmic trade. The algorithmic trade would only give you that indication on the 15-second time frame of everything that happened on the 5-minute and the 1-minute time frame. But like I say, if you think that it's getting close enough where you can make an entry because the 5 is looking good and the 1 is looking good, 15-second hadn't hit, or the 5 looks really good, the 1 didn't hit, but 15-second looks right, so you can kind of make that educated decision yourself. So let's get this loaded up. While this gets loaded up, I want to get my other computer set up. There we go. All right, now we got the audio. Jeez, man, this is more than my first time being on mute for this long a period of time. But anyway, so again, man, I'm just here. I'm just here working it out, and so I just decided to hop on while I work it out. So, free to join. All right. Like I said, I'm trying to figure out why this one doesn't work and this one doesn't work, and then get rid of these two guys. They are both short bars. They both came after a long bar, but the condition that is met that allows us for us to get these bars are also a short bar following a long bar. So that's not. Is this the same? This is not I mean, it looks almost the same, right? So you have this wide bar with the wider wick, short bar. I mean, this is a bullish bar, but wide bar, similarly sized wick, and shorter candle. And also, both of them look about identical. Like I said, when you look at how the bars look, right? So the size of the bar and the size of the wick. Well, this wick is a little bit shorter, but they look very close. So there is some relationship between the length of the bar and I tell you what. See this. I'm looking at the size of the bar, the range of this bar here related to the range of the wick, and the body of this bar is shorter than the range of the wick there, which I think is very similar in the instances where it does work also. No, because this instance where it works, the body of the bar is actually longer than the length of the wick. This instance here looks like it works. The body of the bar is longer than the wick. So that's at least 2 times that the condition being met still works, and it would get rid of both of those instances where it didn't work. Let's see where else it did work at and see what the range of the bar looks like compared to the range of the length of the bottom wick. This one worked. The body of the that entry bar is larger than the length of the bottom wick. So that looks like to be a good condition that we just talked about. All right, so, all right, that's it. All right, so that's what I'm gonna do. I'm gonna change that. And then that's going to fix that. Now, whether or not it works for other days also, who knows? But so we're going to say that condition 6, 1, 2, 3, 4, 5, 6, condition 7. We're going to say that the range is less than, no, the range is greater than the bottom wick of the bar before it. Verify that. Okay, now when we verified that, we lost these two, right? So remember, this was triggered and this was triggered. Now they're gone. All right, so let's okay, so working from right to left, we do get that one there, and that's a good entry. That was one entry for that day. The following day, we get this entry here, which is a good entry. Let's just, out of curiosity, this one would be this is 0.23% to 0.05. What's that? 1 to 4? Okay. And then this first one let's see, if we entered here at the top of the bar, and that was our risk, but it went up as high as that, then it made a 0.39% gain. We'll call it 0.4, and the risk would have been 0.14. So 0.4 to 1.4. All right, so that's a little bit less. That is not quite 1 to 3, right? Why does that seem wrong? It seems like that should be more than that. 0.14 to 0.4. Yeah, 0.13 to 0.3. So a little bit less than 1.3. So like 1 to 1.25, something like that. 1 to 2.5. I'll call it 1 to 2.5. All right. And then I think we could have maybe one more that would have been triggered. 1 to 4, 1 to 2.5. Or did we lose that one when we changed the criteria? No, we didn't. And we actually kept both of these. That's awesome. All right, so this one, from there to here, went up 0.38, call it 0.4, 0.9, so that's about a 1 to 4. And then this one, there, that looks like the 2.5. All right, so 0.17 to 0.04. So that's 1 to 4 also. Okay, good deal. So over now, let's stretch it out. That is on what, how many days back? That's 5 days back. Let's go 15 days back and see how many times we find that it doesn't work out, because it's not going to work right every time. All right, so we got to go back past those 5 days. So we got that 1 to 4. Was that the last one? There we go. 1 to 4, 1 to 4. Now we're in new territory. Ooh. Even in new territory, I mean, that's a nice move up. It didn't get the bottom, and I mean, you might have got stopped out, but then once it moved up here, you regain that confidence. So I like it. I like it. And I don't know what's over to the left over here, giving you another indication of a stop area. So that's also going to be important. But then you have this overhead area over here, right? So you got boom, and you got boom. So you know that this is probably a good exit area anyway, or just below it. But anyhow, you got 0.68 to 0.14. Eesh. Now my math isn't that good on that one. Let's see, what's that? 0.7, 0.36. That'll be 4. Probably about close to 1 to 4. Maybe 4.5 or something like that. But we'll go 1 to 4. And if I'm wrong, then put it in the chat, cause yeah. All right, so 1 to 4. All right, I don't like this one as well, but it's still not bad. I mean, if you had got in here, you still could have wicked up, caught that pullback, but just as quickly as that flush. I mean, yeesh, that's fairly aggressive there. That looks like just a 1 to 2. 0.23 to 0.13. So yeah, like a 1 to 2. I mean, we'll just call it 1 to 1.5. And then this one is garbage. How come this one showed up though, right? All right, let's come back to that one. Because based on the criteria that we put in, that body is not, this body is not longer than this bottom wick. And that's what we said. Well, the body here, I guess, is 0? What does that say? It says the open and the close are the same thing, so that'd be 0. But this bottom wick here has some breadth. So why did that show up? Because we said that the range. Oh, we said the range has to be greater than the bottom wick. What I was looking for was the body. Now we got to go back and look, because of course we get rid of that one, but did any new ones pop back up? Okay, so we'll still keep the ones that were good. Should, right? Well, I guess we don't have to, but let's see. So we got those, the 1 to 4. Got that 1 to 4, that 1 to 4. Still got that 1 to 4. We still got that one. And yeah, we did lose that last one that we were just talking about. We did gain, so we got this one, so this is cool. All right, this is the end of the day. So, and what I'm saying here, normal trading hours, institutional trading hours end at 4 o'clock. So we'll put that 4 o'clock end of the day instead of going up into the after hours. So let's make this is the bar here. So we would have got in here, stop loss down there, moved up as high as that. That's a gain of 0.22% and a risk of 0.03. So what is that? 1 to 7. I should have put this on the mess desk. Part 2. All right. So again, we went back 15 days, and so far all of them have been profitable. And this one here, though, this one, no bueno, no good, no bueno. So this one is bad. I mean, there's no. You got to execute your stop here, so you probably would have got out down here. All right. So that's an L. Big old L on that one, but this one worked. So hopefully you made your gains here, and then you just lost an R over here. But if you got in at that bar there, it's top of that bar here, and it moved up in here, and what is that? A 1 to 3 almost, 1 to 2.5. Went up 0.27, risking 0.09. So yeah. Okay, 1 to 3. All right, so I think so far we just have this one that didn't work out. And okay, out of 15 days, we had like 10 or 12 to hit. We just had one that didn't. So looking good. Let's go back 25 days. All right, so we got that green one there. That green one down there. Those two greens. Did we lose one? Yeah, I think we lost one. I think we lost this one here when we made that last adjustment to the code. So what? That was a 1 to 4. That was a good one. Yeah, because that one was here. So we lost this one. Yeah, because this one has relatively no bottom wick, and that's why we lost that. All right, that sucks. But other opportunities, there's some there. That was a small scout back there. There's one. There's the ale. That one's good. Okay. Now that was a huge push up right there, right? So arguably you could say, all right, well, you know, everything to the right of that was a lot of bullish action. So what happened prior to that big push up? Because most likely you were in sideways territory or you were bearish. Here it caught these bottoms, right? Caught the bottoms. There's not a lot of meat on those potatoes, though. Like I said, I think this is where the other technical analysis part would come into play, where you look at the overall pattern, the trend, and say, well, there's a lot of, you know, there's these pushes here, right? And so if you're pushing down here, then you're likely at the top of here. This is demand. Well, then what is this? Is this more demand? Probably not. It's probably demand. And then that would make the move up supply, right? So yeah, do you get in here up here? Do you get in up here at full size? Probably not. But these are roughly the same. We're going to call them the same. That second one's a little bit less, but 0.08 on the move up, risking 0.04, so that's a 1 to 2. Yeah. And it just kind of held that level there. 102, 1 to 2. All right. Get out of there. All right, so we're back 25 days now. What's going on over here? Okay, so again, what it got in up here? That's a huge bearish candle, though. You know that you're under the bridge, right? So, you know, how do you climb on top of that before you like really expecting long positions? You gotta be on the other side of this bridge, if you want to call it that. All right, so that's a 1 to 1, if anything. Yeah, that's a 1 to 1, if anything. A little bit less, actually. Good for a quick scalp, but again, taking longs in the short market could be tough. All right. You got in here at the close of the bar. There's your stop. Let's move up. Up 0.22. Risking 0.04. So we call that a 1 to 5. And then here, risking 0.07 to make 40, almost 6. We'll call it 5.5. We'll just call it 5. Oh, both those are 1 to 5. Very good. All right, so continuing back. You know what? This is one of the better scripts that I've written. And I just wrote it laying on the floor while my daughter was headed off to sleep. You just never know when you're gonna get those ideas. 0.20 to 0.04, so it's 1 to 5. 0.15. to 0.02. Really? 7. Just kind of doing that back testing, guys. All right, I see one that didn't work, which I'm kind of almost relieved because, you know, for it to work this well, that'd be a shame. 0.16, 0.05, 1 to 3. So it looks like you should really be able to get at least 1 to 3 out of this strategy, this entry. So if you were to get in here, you would get in up here. That would be an L. That's an L. And this is also market open, right? So from market open, I mean, it just kind of shot straight down. So where's your pullback? Where's your pullback? Where do you break the descending trend? And then we're looking for some evidence of support, which again, I mean, you can find your support in pre-market hours, but ish, everybody doesn't agree on those numbers. Pre-market, the bottom of the pre-market, everybody doesn't agree on those numbers. So wait till you got some market open, some institutional support before you take those entries. So what happened right here? What happened here to the left? To the left of this. Oh, okay, so to the left of this, we do have some support. We got a bunch of wicks down there. Okay. All right, so again, we're looking at 25 days. All right, that one there is dust. That one did not work. And then that was the last one. Okay, so with this particular script over the 5-minute time frame on ES, it did not work that one time. Shouldn't have used those circles on that one. All right, so it didn't work that one time over 25 days. And I think I circled the ones where it didn't work. I circled it on the chart. So it didn't work once, twice. Three times. It didn't work 3 times, but it did work probably 20 times. Maybe 15 times. All right, let's see. 1. Let me go back from left to right. Better on my wrist. All right, so it did work once, twice, 3 times, 4, 5, 6. We'll just call that 7. 8, 9, 10. That's not one. That one, it disappeared. So we got 11, 12, 13, 14. I said 15, 14. All right, so 14 times it did work, 3 times it didn't work. All right, what's the math on that? So that's 17 total, which is an 82% strike rate. And it's roughly a 1 to 3 risk to reward. So I like that. Let's see. Set with 1 to 3 risk. I think it went up as far as 1 to 5. 1 to, or maybe it was like 1 to 7. There's a 1 to 7 there. Another 1 to 7. Yep, so up to 1 to 7. Okay, so now what I'm going to do is I'm going to drill down to a lower time frame when, well, this is where it gets complicated. I'm going to drill down to a lower time frame when we get into this range here, and then see if I can come up with a, dang it, I really got to come up with a better hotkey for this. But I'm going to drill down to like the 1 minute time frame when we get a 5 minute trigger, like on this with this script. I'm going to drill down to a 1 minute time frame and then find a script that works specifically within that range on multiple of these charts, of these entries. Am I on the same 5 minute time frame? No, I think it switched me over. See, mesh desk part 2. Yeah, there we go. All right, so what was I? W? QW? Yeah, QW. Okay. All right. I'll QW. All right, so like I said, when I get that entry, now I'm going to do global positioning. That's where the T comes in. That hit that, and then so that brings me over. This is from my other desktop. That pulled me up right here. Okay, but so like I said, I don't want to look at the 5 minute time frame right now. Now I want to look at the 1 minute time frame at the same time frame. The same time frame, 1 o'clock here on 12/27. All right. Catch that again. Okay, so we're here. All right, so that 5 minute script, man, it's not bad on the 1 minute time frame. I mean, that one's not great, but I mean, that one's not great, but there is some, I mean, with a risk on there, there is a movement here. This is the same, like I said, this is the same script for the 5 minute time frame that it triggered it on the 5 minute time frame and here on the 1 minute time frame. This one here is no good. That one there looks good. All right, I'm looking for any more green dots. That one there is no good. Let's go back. I mean, those are good for a little bit of a sweep of a few dollars. That one's good. That one there is okay. I mean, honestly, this is identifying moves better than I do myself. So I'm being 100% honest with you. You know, caught the bottom here, caught the bottom here. So I might just use this on the 1 minute time frame as well, just for kicks. Now here it didn't do as well. I mean, you know, I'd say you probably would have got stopped out here, right, before you even got up there. That one really no good. I mean, you could have got in, moved your stop up, especially since, I don't know, if you feel like that this was the bottom and then it wicked in and wicked back out, and you get in here at the very bottom at the very bottom after the wick, and then move your stop up as you go. That one looks great. Those 2, 3 look perfect. Yucks. Those look okay. All right, and that one right there looks terrible, but that one looks great. Yeah. And see, my thing is right now, even after seeing this and putting that together and those look great, now it's like I don't even know what to do with it. You know what I mean? I don't know what to do with it because I see the value there, but what I really need to do now, because this is over 25 days and we got some good potential entries. But what I really need to do now is figure out how to trade this strategy, figure out when it works best and when it doesn't. So if I was smart, that's what I would do. I like to consider myself smart, but I'm also a bit naive. Okay, so I'm gonna go back into what I was doing before, which was getting into this zone here, and so that one there, that zone there, this was, so once this 5-minute candle close and you officially got this green dot, this one started, you'd want to get in here, right? So we're gonna put the marker on that candle there, and we're saying that this is the time point which we would have got in, that we're interested in. Okay. So we kind of want to look from here to here. This is the range that we want our 1-minute time frame to work in. You understand what I'm doing? Finding out where my 5-minute, this is where my 5-minute time frame told me to enter. My 5-minute trigger told me to enter. And so now, once it tells me to enter there, then I'm going to come down to the 1-minute time frame, and I'm going to try to find a strategy that works great for the 1-minute time frame. Got me? All right, so I want to catch that. I just really want to catch the lows, the lowest of the lows prior to the moves. All right, so all of these, well, so this one comes after a long range bearish candle. So does this one. This one doesn't. This one does. The volume, if you look down here at the volume, see the volume is a little bit dipped here under the average. Here it's dipped under the 6 moving average, which is this yellow orange one. Here it's dipped under the 6 average. And here it is not, except for if you were to get in on this bar, which is a longer bar. All right, so let's go to the, let's go here and open up a new show me. We're gonna do ES 1231, 1 minute. All right, so we said that we want the volume or ticks to be less than V6, which is the volume of 6 candles, average of 6 candles, the volume. The average volume of 6 candles. All right. Okay, so what else? All right, so the lows are under all these moving averages because it's a nice little dip down. So the lows are under all of the averages. Right. Okay, so we're going to say that the low is under we'll say the SA9 period moving average, and the low is under the SA25 period moving average. I'm going to verify that. Come back over here, click in, show me. This will be the ES 1231. Yeah. All right. So these are green too. Actually, we need to move the other ones, make the other ones blue, because typically for the funny 1 minute time frame strategies, I use the green indicators. For the 15-second strategies, I'll use yellow, and for the 5 minute, I'll use blue. So this one here, 5 minute, I need to change this to blue. That way, if I have them on the same chart at the same time, I'll know that I'm looking at blue. I'm looking at 5 minute indicator on a 1 minute chart, and I know that I probably shouldn't take that. All right, so these are the greens. This is the script that we just put together here. So obviously we have to clean this up a lot. And again, we're only looking under this yellow bar here. This is the go bar. Bar based on 5 minute entry. Okay, so whatever's happening over here, we don't really care. Okay, and then whatever's happening beyond this is outside of our 1 to 3 risk to reward ratio based on our 5 minute time of entry. So we don't care what's on the right side of the bar. We don't care what's on the left side of the bar. We just care about what's going on in here. All right. So these were okay. These are okay. This one is okay. That's what we want. This one's okay. That's what we want. We don't want these. These are okay. These are okay. We don't want that. Really, all of these in here are okay because they are leading up to the move up and they respect this stop loss. So I don't like this one here. So I think just a simple one that I want to say is I don't want it to be a doji bar, right? So you see how this bar here is like a doji. I mean, like just a nobody doji. It open and close at the same spot. That shows true indecision, and we don't want to enter on one of those bars. Here we don't need to enter on that bar. All right, so we're going to say that the body has to be longer than has to be greater than 0. All right, and then so we got rid of this guy here. All right, and then boom, 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 boom. Well, I see. I mean, we don't really want the bullish candles, especially like this. This bullish candle has already made this move. It's really long. It's already made this move. So, I mean, but it's okay to get like a bullish candle down here though, right? It's okay to like get in on this bullish candle, right? Right. This one here, is it okay to get in on that candle? I mean, that's a decent entry. You really want to get in on the pullback, so the bearish candle. That's one thing I always kind of fight with myself about is get in on the bullish or the bearish. And sometimes there are bullish candles that have small range. I tell you what, well then I want to do that. I want to do that. Yeah. That's what I like about coding. And this, as long as I've been coding, I have not decided to do that. But because like my logic says this or that, but I don't put it in the code. Some of it is laziness, and then some of it is, yeah, I don't know. But so what I'm gonna do is I'm gonna say that it's got to be a bearish bar, or it's got to be a small range bullish bar. So I'm gonna say it's got to be a bear, or, and I don't use or a lot, and maybe that's why. Maybe I need to spend a little bit more time for or, but we're gonna try it today. Bear or bull and range less than 7 candles, the range of 7 candles, right? So it's got to be a bearish candle, or it's got to be a bullish candle with a small range, with a range less than the average past 7 ranges. All right, so let's see what that looks like. Okay, it seemed like it liked it. All right, so let's put that back. So condition 4. Okay, so again, so condition 4 is the relationship of length, right? Yeesh. All right. But so we got this bullish candle in here, and you might say, hey, Eric, well, you know, if you got in on this bullish candle, you get in right here. Once that candle finishes, you get in right here, which you could capture all this. Yeah, but you got all this range here at the bottom too. If you got in at this bullish candle, you'd have got in here, and there's some range up top. I just don't like, I've lost a lot chasing moves, and I think when you chase it to the upside, the smart money has already got the upper hand on you. So I really don't want to get in on long range candles. I feel like this one disappeared though, right? I feel like this red one disappeared. So let's keep our eyes on this red one, because I feel like that red one disappeared. So we're going to delete that out, re-verify it. No, we didn't. Okay, good. So the OR worked, right? So we got this blue one that still showed up, but it's a small range blue candle. We didn't want to get on this long range blue candle. Small range candle's okay. We got in on this red one, and that's, you know, I mean, it is what it is. Still got to have a stop somewhere, and you might have put your stop down here. So, you know, otherwise the obvious stop is down here, right? You know, or yeah, or it's just right here at this bottom wick. So you might have got stopped out there, or the way that you trade it is maybe that you do multiple contracts and you scale your way out, seeing that you have 2 potential exits, right? So like I said, that's one of the things that I have to do. That's the hard work that I have to do. I like this coding part. I don't like the hard work of looking back and doing the technical analysis, really doing that back testing with multiple percent. I really don't enjoy doing that part as much, but I think that's probably what's going to make the difference between whether I'm super profitable this year or if I'm just kind of, you know, hanging out in neutral zone. But that one worked. Okay, so these, I'm okay with these, but I think we need to get rid of some of these in here. There's a lot going on in here. We got this one, that's good. We got that one, that's good. We lost these. I think it's based on the length of these bars. And it'd be okay to get in on this red one here, but this red one has really high volume, which also is a, you know what? Let's do OR for that. Also, I don't know. Because I'm looking, I know I've made other strategies where it worked really well, that the that there was a long range bearish candle, and then following it was a shorter range candle with a lower volume. That did happen here. Long range bearish candle. There's a shorter range candle following with less volume, but it is a bullish candle, and it's a shorter range candle, but it's not a short range candle. So we just lose this one altogether. And I mean, let's face it, it's a very volatile area in here. That was a huge drop down. So it's probably better on the safe side, safer side, not to get in on that one anyway, right? All right. but we kept that one. We got that. That's okay. We missed this one, and I think it's based. Yeah, it's based on the length of this bullish candle. The bearish candle did not have enough. The volume was not low enough, and the bullish candle range was too long. But we captured this one, so that was good. Again, we don't need to trade more. We just need to trade better. Right? But I am a fan of trading more. I am. And that's why I'm even looking at this 1 minute time frame, because I already identified, we identified earlier in the video here that we've got pretty good success with the 5 minute time frame for entries on the ES. But now I want to drill down to the 1 minute time frame so I can either have a I don't want to say a better entry, because like when you get in on this time frame, now you really need to be looking at either a stop loss based on the 5 minute time frame, or if you're going more aggressive and you're scaling your size up, then you need to adjust your stop loss to match that. So, all right, how do we get rid of these? I'll say the low is less than the, I think we just need to say that, for one, we need to say that the open is less than the 9-period moving average. Or less than the 15-period moving average. No, 25. Yeah. You didn't like that, did you? All right. All right, so that cleaned that up a lot. So we still got this one. We got this one. That one's okay. That one's good. We got a bunch of stuff going on in here, but again, to know that you got to stop somewhere here, whether or not your stop is here or down here, you might get stopped out on that one. But yeah. I think this would have to be an area that you're definitely scaling. Because you've already broken below here, and now you're here. So but how would you get rid of these? What doesn't make sense? What doesn't make sense? That was following a really long bearish candle. And then the regression line was acutely negative. Well, I mean, that's one thing that the other ones don't have, is that all this was following a really bearish candle. So I'm thinking if we, well, no, okay. So if we make the condition that there is not a long range bearish candle, now this will be a new one for me. I don't know how it would do that. So what I'm wanting to say is that when the bar crosses this yellow line, so when the chart crosses the 15 period moving average, if it's a really long bearish bar, then don't take any trades until you get a really long bullish bar. So how would I do that? All right, I told you 2024 I'm gonna do some new stuff. I'm gonna stop being lazy. So I'm gonna at least try it, because otherwise I've got something that looks pretty decent anyway, right? So like I said, you start here on this bar, so you would get in on here. That's a nice move up. You get in here, that's at least a decent move up. You've got a tangible, a visible stop loss area. You get in here, you've got a visible stop loss area. Nice move up. And then here, this is the area that we're working on, okay? And then here, you would get in here. Well, this is the candle. You would get in here at the close. You might get stopped out here, or if you set your stop loss to the one liquidity range below it, or you scaled out, you might still be in the race and you make this move up. Or you got in here and you made that nice move up. So as far as I'm concerned, all these are winners. All these are winners. All right, and then we're done by here because we're out of that 5 minute territory for the entry for the 1 to 3 that we're looking for. All right, so I'm just going to work on this. So what I said was that so first I need to identify when the low crosses the 15-minute moving average. So I need to make a value that identifies how many bars ago that was. So it would be something like I think it'd be MRO, so most recent occurrence. So the test length instance. So the test would be a bearish bar, bear, and the low I know I created a function between. So between. Now I created this function. I'm proud of this. It's between. So you got price, the high limit, and the low limit. So the price that we're looking for is the 25 period moving average, or the 15 period moving average, and then the high limit would be because we're talking about a bearish bar, so the high of the bearish bar would be the open, and the low of the bearish bar would be the lower. We're talking about the close. All right, so it's a bearish bar, and the bar crossed the 15 period moving average. Okay, and it's a long bar, so we need to also say, and the range of that bar is greater than the 7 bar range length. All right, so so that's the test. All that's the test. So what do we say? MRO is the test, the length. So we're going to look back. Considering that we're looking at 1 minute time frame, and the waves are usually about the same. You see, I'm looking from the bottom to the top. You can go from top to top, or you can go from bottom to the top. Either way, whatever you consider it to be, I'm going to consider it to be, this length is how many bar count, 13 bars. So I'm going to look back. I'm going to look back 20 bars. So I'm going to look back 20 bars. All right. And then let's go back to the definition. So we have the test length and instance. So we want to find the most recent instance. So we'll put 1. All right, so what MRO is going to tell us is going to tell us how many bars back ago it happened. Okay. All right, so now that we have how many bars ago this happened, when we get to here, so this bar, all this right here, it happened on this bar. All right, this is our bar of interest. Bam. All right. So when we get to this bar, when you hit 242 in the day, the value of value 2 over here, value 2, how many bars ago that this happened, is going to say 1 bar ago. When you get here, it's going to say 2 bars ago. When you get here, it's going to say 3 bars ago. Here, it's going to say 4 bars ago. So I've got to say something like, what's the condition that I'm looking for? I've got to say, ooh, I could look for a bullish bar. I could look for a long range bullish bar, and I'll just say that how many bars ago did the bullish bar happen? This has to be less than this. I hope you follow what I'm saying. So again, by the time I get here, so here we're 1, 2, 3, 4, 5, 6, 7, 8, 9. So now, once we're on this bar, this long bar happened 9 bars ago. We don't want to take a trade if this cross happened within 20 bars, or maybe we should move it to 15. If it happened within 15 bars ago, and we have not yet gotten a large range bullish bar, how do we compare whether or not we got a large range bullish bar? Well, we need to do the same thing with MRO for that, and then we'll compare value 2 to value 3. Value 3 for the large bullish bar should be less than value 3. Let's try it. MRO, so we got a bull, and the range is larger than range 7. I think that'll work. So that was test length. So we'll do the same length, 15, and the instance, the most recent one. Okay. All right, so now the condition is going to say that value 3 has to be less than value 2. All right. Fingers crossed. Fingers crossed. Okay. All right, but it got rid of all these. And again, I'd rather trade. I've had a lot of fun with trading. Now I want to take it more seriously. I want to make the money instead of just having the fun. So trading more is not necessarily what I'm looking for. I'm looking for more profitable moves. All right, but let's take condition 5 back out of it, because I think we lost a few more. We lost at least one more. I think we had one over here, didn't we? Yeah, we had this one. Okay, so that means that somewhere in here we're saying that we got a large range bearish bar without a bullish bar in front of it. All right, so value 3 is less than value 2. We're going 15 candles out. Okay, we lost this one because this bearish bar did cross, this large range or long range bearish bar did cross this yellow line. Okay, and it crossed that yellow line and we didn't get a long range bullish bar before we got this. We got a short range bullish bar. Okay. Now, I thought I put something about volume. I did not. Okay, so the volume on this bearish bar, because it was a flush, because it broke through this ascending support and it was a true flush, you had large volume on that as well. This one over here, you didn't have large volume on, right? So we need to go up here, and that bear that crossed the 15 period moving average and had that long range, it also needs to have, you got it, large volume. And ticks, which is the volume, is greater than, I mean, that's like twice the 6 period moving average. 2 times V6. Verify that. Okay, but now again, I just changed value 2. It's still calculating, but it's not a part of the condition until we take that out. All right, still lost it. What did we do? What did we do? We lost everything. All right, let me see here. And ticks is greater than 2 times V6. Is it still on the chart? Yes, 1 minute. It's on. All right, let's see here. All right, so we got the bear, 15, range 7, and ticks is greater than, and the ticks is greater than V6. Greater than 2 times V6. V6. Bum, 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 bum. I think, well, this one crossed the 15 period moving average also, but again, it does not have high volume. So whatever I got in here should not be canceling out what we got there. Condition 5. Condition 5. All right, I'm gonna mute that back out. So, like, even though this is a little bit of a longer bearish bar, the volume is not 2 times V6. It's not 2 times the 6 period moving average. So that should not be altering our performance that much. It's condition 5. Okay, so we got this one without that. Bear, bull. I think I think I know what it is. All right, so again, if you're calculating the most recent occurrence, for this number, you're going to get the number of bars back that this occurred on. If you don't get any hits, it's not null, it's not nothing. It actually populates as -1. And so does this, same thing. So when I'm calling here for value 3 to be less than value 2, well, if this will be -1 if it doesn't find anything, it'll be -1. If this doesn't find anything, it'll be -1. So either way, what I'm saying is I need to make the condition look to make sure that those values are greater than 0, I think. but I know that's where the issue is. All right, so value 3 is less than value 2. I think I want to say something like, if value 3 is greater than 0, then value 3 has got to be less than value 2. Yeah, because otherwise value 3 is always going to be less than value 2 because it's going to be -1. If it doesn't find it, it's going to be -1. Okay, so yeah, so condition 5. So if value 3 is greater than 0, then condition 5 equals value 3. Condition 5 equals value 3. Then I gotta do then begin. Condition 5 equals value 3 is less than value 2. I think I can do else. Condition 5 equals false. End. I think that'll work. No, then begin. I gotta end it first. Yeah, else. Then begin else condition 5 equals false. Then begin condition 5 else condition 5 equals false. End. Yeah, that should be it. No. And begin. End. Well, I'll do it this way then. I'll just call it twice. If value 3 is less than 0, then condition 5 equals false. Let's see if that works. Oh, value 3. There we go. Okay. But I still have condition 5 muted. And bada bing. Very good, Eric. Very good. Okay, but so we still lost this one here. Where is it? We still lost this one here. Did I change that value, that ticks? No, I didn't. I took the ticks out, so we need to put that back in. So, and ticks is greater than 2 times V6. What? Who's that peeping in my window? All right. And ticks is greater than. Let me just put this in parentheses in case it's acting funny for that reason. And ticks is greater than ticks, which is volume, is greater than 2 times V6. All right, let me try something here. this time. So what I did was I'm printing the date, the time, and then the ticks. So I need to see how many ticks there are because I think something's wrong with the tick statement. And so then I'm gonna do ticks. Okay, so now I need to go and find, so I'm trying to reference this time in here because I know this is one that should be working. All right, so 328 on 1219, 328 on 1219. Can I go more lines than that? $12.19. What did I say? 328? Around 328, 1528. 1528, 955, and 2640. So that is, so the ticks, which is 955. Okay, well that's not right. Ticks, right, correct. So yeah, so the ticks, so the volume is less than 2 times the average ticks. Okay, so back up here, we're saying that for this to trigger, that the ticks has to be greater than the volume has to be greater than 2 times the V6, 2 times the moving average there. And that is all right. So I think something has gone awry with the statement we put here. Okay. All right, so that's the last piece of the puzzle. Again, this is the stuff like the rest of it I do often enough. This piece here, I don't do this piece often. So this is the growing pains right here. All right, so condition 5. If value 3 is greater than 0, then condition 5 it's got to be that value 3. No, I put that. Yeah. Oh, that's because I'm dealing with the wrong thing. Okay, so if value I put if value 3 is greater than 0, I need to be saying if value 2, which is the bearish candle, excuse me, if value 2 is greater than 0, then begin condition 5, value 3 must be less than value 2. Okay, and value, it just got complicated, but I mean I hope I can help you understand why. And value 2 is greater than 0. All right, so what's happening is that let me take my music out, because what's happening is this is referencing value 3. This bullish bar is referencing value 2. If you have a value 3 show up, you need to find a value 2 before you take another trade. Right? Value 2 the number of bars back ago that value 2 is has to be less than the number of bars ago that value 3 was. If the chart does not find the value 2, does not find the value 2, or excuse me, does not find the value 3, does not find a bullish bar, then again, it's automatically going to populate -1. And -1 is going to be less than how many ever bars ago this has. So as soon as you get this bar, as soon as you find this, this is going to say it happened 1 bar ago. It happened 2 bars ago. It happened 3 bars ago. Now, as soon as you get this bar, now you're comparing, you're looking for value 3 to come up. You're looking for that bullish bar to come up. Well, you're looking for that bullish bar to say that it's happened less bars ago than this bar. Well, if it doesn't find the bullish bar, it's going to record -1. And -1 is always going to be less than whatever this number is. So that's what we have to account for. We have to say that value 2 actually has to be greater than 0, which means that it found a bullish bar. Not only did it find a bullish bar, but that bullish bar's value, is, so there's a bullish bar value 3. So that bullish bar's value is less than, or happened more recent than the bearish bar. Oh boy. All right, so if we got that, and then that's true. If value 2 is less than 0, then condition 5 equals false. I think I see why I lost everything too. The thing about these conditions is they don't necessarily reset when they're done. They just kind of stay what they are unless the criteria hits again. They just stay what they are. The criteria has to will have to make it positive or negative, true or false. And if the criteria does not create a true or false, then it'll just record what was on the prior bar. And that's what I was trying to account for here, but I don't think I need to do that. We're just going to say condition 5 will be true if these things happen. Yeah, that's the thing. Because if these things don't happen, then it's going to automatically be false, and that's probably why we're not getting anything. All right, so if value 2 is greater than 0, then begin condition. Okay. Yeah, if value 2 is greater than 0, then we're going to look at the condition and we're going to code for condition 5. But if it's not greater than 0, which means that we didn't find a bullish bar, so if value 2 is less than 0, then, which just means that we didn't find that cross, then condition 5 equals true. That should do it. Fingers crossed. I can spell condition right. And that's all the brain power that I have for today. No. I will get to the bottom of this. All right. ticks. This should not have fired. This should not have fired because it did find this bar here. It found a bear where the 15 is. Oh, and that's another something I need to look at too, because this doesn't say which direction it is. Yeah, it does. Okay, the open is higher, closes lower than the 15, and the range. Oh, come on, guys! Y'all didn't tell me. Come on, man! Y'all didn't tell me that the range of this bar has to be greater than the range of the past 7 bars. This range is greater than the range of the past 7 bars, not less than. Operators, boy, operators, they'll do you in. They'll do you in. It's just like putting the number 5, but you really mean the number 7. Math and science and this coding stuff, it has little room for errors. It is not forgiving. And I guess that's what I like about it too, is, there ain't no fumbling. If you fumbling, then you messing up. So you got the opportunity to do it right. Okay, so when we verified that, now we got rid of a lot of that junk in there, right? So, and that's what we coded for, right? We said that if we had this long range bearish bar that crossed under the 15 period moving average, we don't want to take another one of these trades until we get a little bit of a longer range bullish bar, right? And so all these that popped up in here, they all disappeared until we got that longer range bullish bar. And then we got this one, right? So then when you got this one, now it's like, all right, well, where do I set my stop loss at? I mean, now you can set your stop loss here, or you can set it the next one down, but at least you're not trying to get in up here and you keep taking, stab wounds as you move down, right? So yeah, that worked out good. Okay. All right, and we still have all the other ones. I'm pleased. Again, that is all that I have the mental capacity for today. Yeah, but now I'm just curious if we go to one of these other 5-minute entries. So this is the 5-minute entry that we found for ES futures with our other script. If we go to another potential entry that it gave us, I think that was, this is a different one. All right, so here. All right, that is around 12:30 on this day. Okay, so this is here. Okay, now once we got the entry trigger on this candle, we can't get it until the candle finishes. We shouldn't get it until the candle finishes. So we would take the entry right here. We start looking right here. So we need to put it on that candle, and that candle sends us to this range. Okay, so now that we're in this range, we're not looking at anything else other than this range here, right? And we're saying that there was a 1 to 4 here from here to up here. So once we cross that 1 to 4 threshold, that 1 to 3 threshold, whatever, we're not really looking at anything else to the right, and we're not looking at anything else to the left because that territory we're not considering. Okay, so that puts us in this territory here. Okay, so again, that was the 5-minute script right there. Okay, and now that the 5-minute script told us to enter, gave us our thumbs up, now we want to say, okay, we drop down to that 1-minute time frame, and we say, where will we get our entry? And once we dropped down to the 1 minute time frame, it gave us an entry bar here or here. So, and both of those look pretty good for entry. Okay. All right. Well, so it does seem to work on other 5 minute entry triggers. All right, very good. Okay, well, I guess I'm getting out of here then. Anybody have any questions? Drop them in the chat. This was fun. I did 2 new things today that that I haven't done in the past, and I'm a better man for it. Yeah. Okay. Okay. Shutting it down. Shutting it down. All right. We're going to be ready to take over the market next week, right? Next week, 2024. Let's get it. I'm ready. I'm ready. Like I said, I haven't proven that I can trade better than my scripts can. So I think I need to start using these scripts. Anywho. Chart ES. All right, then. Well, I'm out of here, guys. It's been fun. Appreciate you for coming and hanging out and maybe learning something. The logic, the scripting is just literally identifying what you see on the chart and putting it into the computer to let the computer look for it instead of you sitting there looking for it. And it's literally just taking the logic that you see, the technical analysis that you see, and putting it into the computer and letting it screen and compute and figure. I mean, yeah, cool. Hey, what more can I say? All right, I'm out. Peace.